Recording is in progress. Let's see who we got here. I need to see everybody's faces. Got my bro Leonard. Bro, how's it going?
Hanging in there, bro. Hanging in there, bro. Just sitting here, you know, with my mom and everything, but it's all going good so far.
Gotcha. We got Jeff, Carlton, Joy, Terrence, Philip, Jason. Got Keith here. Okay. And we got Miss Dynasty. The protege. All right, guys, we're gonna get started here. For the sake of me not being called out for rambling, I wrote some notes down so we can stick to the script. Right. So the first 30 minutes of this, I'm just gonna refresh you guys on the strategy itself. We're gonna talk about that. And stop me if you have any questions. I'm gonna go straight through the steps 1, 2, 3, and 4, right? And each step I'm gonna stop is just to make sure that we have a shared understanding of what exactly we're looking at. All right, and we're gonna get started ahorita. Let's see, let me make sure I share this right here with you guys. Bam. Bam. Can you guys see my screen? I'm actually on FinViz right now.
Yes.
No.
Yep.
I see TD Ameritrade. Now we see. There we go.
Okay. So we embarked on this journey just a few weeks ago, right? 2 weeks now, right? And the first thing that we talked about the strategies here is the EMA, right? The 21 EMA. We said that the 21 EMA was going to be the what? Can anybody remember? I really need you guys' help on this one. What's the 21 EMA?
That's like the mean, right? The baseline.
That's exactly what it is. Exactly what it is, right? That's exactly what it is. It is the mean, right? So whenever we adjust the mean, we're just talking about the 21 moving average. And we all know that a moving average is just an indicator, right? That calculates the direction or average price movement of a stock within a certain time frame. So the time frame could be 10 days, 20 days, right? Those are the common ones. You have a 50-day, right, moving average. You guys know about the 150 and 200-day moving average, right? So again, that's what the moving average is, an indicator that calculates on average, right, the direction or the price movement of a certain stock or security or ETF. So again, we started with the mean, and I'm gonna take all these moving average from here, and I'm gonna add them one by one so you guys we can build upon what we're talking about, right? So this is the chart here, and what we were trying to get at, right, was this. We said that the 21 moving average, right here, EMA, this is lemonade. The 21 moving average was the mean, right? Step number 1, understand the mean, right? And understand the importance of the mean. The mean being that every time we actually find ourselves around the mean, we're gonna place our trade. We're either gonna do calls or puts, right? And we said that if a stock such as this one, if it holds strong the mean, right, we're gonna be looking into buying some calls. Right, we said that. We said that if a stock breaks, right, breaks below the mean with heavy volume, right? If it breaks below the mean by heavy volume, right, we're gonna look into buying some what? Some puts, right? You guys see that? Because now it's become bearish. Make sense? Right? So step number 1 is understanding what the 21 moving average is and the importance of the 21 moving average. We buy calls and puts, right, off the 21 moving average or within step number 3, which is the ATR. We're going to talk about that, right? For the 21 moving average, that's the importance of it. Does anybody have any questions on the moving average or the mean?
So can you just take a step back? And you said when it breaks, you're basically saying when it breaks below the mean is when you're looking for the puts, right?
Yeah, exactly.
Okay.
So for example, you see this break here, right? That means the price action, that means that's weakness. And look what happens, right? You see it broke here, look what happened. Makes sense?
So on average, when you saying it's holding at the mean, like how many candlesticks are you basically looking at for that support?
So at least 2, right? At least 2. Good question, really good question. At least 2, right? Yes.
And this one is using, this is using the day chart now, right?
Yeah, so this is using the 30-minute chart. It's a 30-minute chart. Right. The same thing can be done with the day chart. You guys notice that. Look at lemonade, right? So lemonade here, right? It broke the mean right here. And since then it's been trading down, down, down. Oh, what's going on here? It broke here and it's been trading down. You guys see that? Right. Each one of these candlesticks represents one day. Right. So in essence, ladies and gentlemen, what we do whenever we buy puts here, right? This is what we do. We wait for the stock to rally, right? Close to the mean, and we buy the puts, right? Right here, right? We wait for the stock to rally close to the mean, boom, right? And this will be our entry point, this box right here, right? And we make our money as it descends down, right? Again, we wait for the rally, right? Here, boom, right? We buy right here. And then we buy right here. We buy the puts right here and it goes down. Make sense? Really, really good questions. These are really great questions.
And then again, can you explain when it's a small candlestick, then right next to it going down is like a larger candlestick in the red. What is that called again? Yesterday you gave a definition.
Yeah, good question. Good question. So this is what happened yesterday, right? So, okay, this is the market today, right? This is the market right now, right? It's trying to open at 27.79, right? So what I gave the challenge was, what is this candle here? What is this? What is this candlestick pattern, right? That's
the evening star, right?
No, that's not an evening star at all.
No, I'm sorry.
I said, what is this one and that one? And when I say these phrases, right, it's for you to Google them, you know, so you can look at them yourself, right? So when you have a candle such as this, and you have a larger one, right? This is called, it can be called a bullish engulfing candle, or it can be called an outside bar, right? Outside bar or bullish engulfing. So please look up those so you can see it for yourself, because for the sake of time, we can't go over every candlestick. So again, bullish engulfing or outside bar, BAR. This here is an indication for continuation for the downside. When I put that out, right, and then I asked you guys for the challenge, what strategy would you use? The strategy would have been puts. Put credit spreads, put debit spreads, anything that said puts, or you were selling calls, that was the strategy. Make sense? Because look what happened. The next day it went down, right? It closed here at 28.64 the next day, right? The next day it closed lower at, next day it closed at 27.56. Make sense?
But you're also coupling that with the fact that we're below the EMA. It's not just the two candles together. We're below the EMA and we have that candle pattern emerging. So that's what's giving us the indicator that it's going to be going in a downward direction potentially.
Yeah, so yes. So the long trend, the big trend, right? On the big picture, the big picture is that we're going down, right? We're sliding down, right? That's the big picture. But also, we know that this here is an indication for downtrend, right? Not only are we already going down, right? We're falling off the aircraft, but now you have more weight on you, right? So you fall a little bit further down. Make sense?
Yep.
Yeah, good analysis. Okay. Any other questions about the mean at all? Okay, we're gonna move forward, right?
All right.
I'm sorry, Philip, did you have something?
No, so all right, I got it.
Okay, so we got that, right? That's the mean, right? The next one is stacked EMAs. So, ladies and gentlemen, with stacked EMAs, you can have stacked EMAs. They're bullish, means that the stock looks like it's going up, or you can have stacked EMAs that are bearish, right? And for this one in particular, we're going to do another stock, which is going to be, let's do Apple, right? And I'm gonna add some moving averages, right? Because when we look at stack EMAs, we're looking at the moving averages, right? That's what we're looking at. So I like the EMAs moving averages, and I like the 34, right? You know, we'll do the 8. I like the 34. I like the 50, right? Here, pink, and green. You got the 8, the 24, and we talked about these. The moving average is an indicator, right? That calculates the direction or the average price movement of a stock within a certain time frame. So when you see these numbers here, this is 21 days, right? On average, in 21 days, this is the way that the stock moves. When you see this 8, it's within 8 days, 34 days, and 50 days, right? Does that make sense? The definition is an indicator that calculates the direction or flow, right? Or the average price movement of a stock within that certain time frame. Any questions before we move forward?
No questions.
Okay. So I know you're asking yourself, like, what is stacked EMAs, right? This is stacked EMAs, ladies and gentlemen, right? Stacked EMAs is when you have the smaller time frame, right? The smaller one is the yellow 8, the 21, the 34, and then the 50 in that order, stacked, right? Makes sense? 8 time frame, 21 time frame, 34 time frame, then 50. As you can see here, right, in this example, this is what you have stacked EMAs, right? You have the 8, which is the shortest time frame, 8 days, right? Then you have the 21 days, right? Followed by the 34 days, right? And lastly, the 50 days, right? That is stacked EMAs on a positive note. You also notice that when EMAs are stacked, the stock has a tendency to go higher and higher and higher. Make sense? Again, this is stacked EMAs positively, right? And of course, in the inverse, right, you have stacked EMAs, right? On the opposite side, look at this, right? So whenever you see the 8 moving average, the lowest one crossing all the other moving average, right? Those stacked EMAs have reversed and become bearish, right? Then usually what follows is going to be the 21, as you can see, trying to creep out of there, right? And then you have the this one, and then the green one, right? So stacked EMAs bearish is usually when the shortest, right? The shortest time frame. This is the 8, right? Goal is 8, crossing, right? All 3 of the other, or however time frames you have, right? That means that the stock has become bearish, right? That means the price action, as you can see here, boom, is going down, 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 right? Any questions on there? Okay, no questions. All right. Okay, that was easy enough. So each stock, right, has a ATR. And ATR stands for average true range, right? That means that on a daily basis, right, how on an average, right, how many dollars that this particular stock moves, right? This one, Lemonade in particular, it moves roughly $3.28 on a daily basis. Let's look at Apple. If we look at Apple here, right, on an average basis, this says that Apple moves $4.46 on an average basis, right? On a daily basis. Why do I got this thing on it? Right. On a daily basis, move $4.46. Make sense? Right. Yeah, I know you're asking what is the importance of that cash flow? Well, whenever we actually are trying to find our profit areas and our stop zone, right? If we know that we're buying at the mean, right? The sweet spot for us to take profits, right? It's 1 ATR, right? 1 ATR is whatever the price movement of that particular stock for that day. Makes sense? We did it with MP. With MP, we bought it at the mean. It went up 1 ATR and we got out of it that day, right? So let me show you. Let me show you the example that we did with MP when we actually traded this particular stock together. We traded on Monday. We have it recorded and we made some good money on it, right? So this stock, let me show you guys the big picture. So this is MP, right? So about, let's say last week sometime, right? Last week, right? MP was trading right here. Boom. It was right here, I'm sorry. Right here, right? MP was trading right there at the mean. We bought it at the mean, right? Like 46 bucks. We bought it at 46 bucks and we knew, oh, excuse-moi. So we bought a MP right there at the EMA, right? At the blue line. Can everybody see the EMA, the blue line, 21 moving average?
Yes, I can see it.
Yes.
So we bought it at the EMA and we knew that we're going to take profits at that ATR, right? The 1 ATR, right? Ideally, you want to take profits at the 1 ATR, right? So the mean was priced at $45.80. And we know the 1 ATR for this stock was $3.14. So if you add 35, let's say round it off to like $36, right? I mean, $46. If you know this is 46 bucks and the ATR is about 1 ATR is about 49, right? Ladies and gentlemen, it doesn't have to go exactly to the 1 ATR, right? That's not the goal here. The goal is to come very close to it. So we saw, boom, that sucker went to $48 and we sold it at 48 bucks. It went from 46 to 48, $2, and we got out of it. And we made our money and we were gone, right? Make sense? That's what we did. We waited for the market to show its hand. It fluctuated, has strength here at the 1 ATR. We got in it at 46 and some change. We sold it at 48 and we were done with it and we made money. I think some of you guys remember that. Right? So that's where you take profits. And your stop zone, right? Your stop zone, we like to use the 1 ATR, right? So when your stop zone, the best thing that you can do, right? And I like to use, it's a certain percentage. I like to use 30%, or, right, I like to use a half of the ATR. If the ATR is $3.14, I'm trying to get out if my stock goes to, for this one in particular, $1.57, I'm gonna get out of it, right? So if I bought it at $46 minus a half ATR, right, which is $1.57, right, I'm gonna get out of it. Make sense?
Makes sense.
Any questions about the ATR? So in essence, right? In essence, this is what we're doing. We're building upon this construct right here. We're building upon this construct that we call the wise planning tool. We're building this construct here, right? Because we know the stock that we're getting in. We know the ticker, right? We know the ticker we're getting in. We know the strategy we're using. We know exactly what price we want to buy it at or where we bought it at. Where we're going to take profits, 1 ATR. 1 ATR equates to $26.15 because we buying puts, right? When we buy puts, we want the price of the stock to go down, right? What's going to be our stop zone? For this one in particular, this sheet, I like 30%, right? My strategy, I'm buying 20 puts expiring on the 4th of Feb. So in essence, you following the steps allows you to fill this, right? This tool out, right? The YS stocks and options planning tool. So you go in a game already prepared, right? That's what you're doing. You're taking a proactive approach to trading. Because if you just going out there with no plan and winging it, you're gambling, right? Our job as traders, the reason why we've been successful for the last 2 weeks, if you followed along, is because we don't get greedy and we make sure that we're consistent. We want to make money, whether it's $50, $20, $1. We want to be consistent. We don't want to lose any money. All the stocks that we traded thus far, right? We traded like 6, 7 stocks. We have made money on all of them following the rules. Like I put all my plays here on this because I know exactly where I'm gonna set up my stop loss. I know exactly where I'm gonna take profits, and I do not get greedy, right? If you don't use this tool, you're gonna fail every time. And when you talk to me about what are you thinking about the market, if you haven't filled this out, I don't really know what to tell you, because the conversation I'm gonna ask you is like, talk to me about your planning tool. Right? I can't show you advanced strategies if you don't want to learn the basics. This is what we fight off. We fight off nothing else but this document. Again, our job is to protect capital. It's to be consistently making money. Any questions about that?
Yes, I do. That with the lemonade, how did you know 1 ATR would be, I guess, $3.50 for this for the 1 ATR, or equates to 1 ATR?
Like this, I just mentioned it that on FinViz, and FinViz, it gives you all the ATRs for each one of the stocks. So I put lemonade here as the. Let me make sure you guys can see my screen. You guys can see. Okay, you guys can see it. Right, I put lemonade in a ticker. It pops up here, lemonade incorporated. Right, I'll go on the right-hand side. It said here, ATR average to range. Right, for the daily, it's $3.28.
Gotcha.
So if I bought it at $29, I just want that sucker to go up or down $3 and 28 cents or whatever. Make sense?
Gotcha. I see it now.
Yeah. Good question.
You have to go to that. You get that particular ATR from that particular stock page. I got
Yep.
you. Okay, I got you.
Yep. Yeah. Please ask all your questions, because we're gonna go over this like every week as far as like the strategy, but we're gonna condense it a little bit down. But again, what you're doing for the steps is allowing you to fill, right, the planning tool, and you already know what you're gonna get into. Make sense? Okay. So then the fourth step, ladies and gentlemen, it's just the planning tool, right? The wise planning tool, right? Completing that, right? You got to complete your plan, right? In the army, we have this, we have like this thing called op orders and stuff, you know, or what do you call it? Troop leading procedures or something, you know. I'm not gonna go into that, but that's another subject. But it's completing the plan, right? And completing the plan is this here, right? So we already know what stocks we're gonna get into, and we know why, right? We know where we're gonna buy it at. As soon as the market opens, okay, this thing is priced at $38. That's why I bought it at. I know where I'm taking profits. I'm taking profits at that 1 ATR, right? The market is bearish. I'm buying puts, right? I'm stopping at 30%. That's, you know, you can change that as you like. I like 30%. Sometimes I like getting risky. I might do 50%. It's up to you or whatever. The strategy, right? I'm buying 20 puts, and I'm gonna show you why I like 20. I like to buy either in the money, or close to the money, or outside the money, right? But it's really depending up to you, though, right? When people always ask me, "What are you buying?" 100% of the time, when I'm talking to you guys, I am buying outside the money. Like, but let's say 99% of the time, I'm buying outside of the money. When I trade by myself, I do different things, right? Because my risk tolerance is a little bit higher. But you should know what you're thinking about buying, like, right? So this is the importance of this is for you to fill it out and you decide what exactly you're going to buy. The premium is just how much it costs you per contract. Once you put the premium here times the number of contract, it gives you the total cost for that particular trade. Makes sense? And I'm still in this trade, so that's why I haven't posted any wins or losses here, right? I'm still in this trade. I was in this trade, but I don't know. I forgot what my profits were. Any questions though, right? And of course, I use different strategies, right? But that's another subject. Like for Siri, for example, I'm going to use unusual options activity. That's something that, you know, we can learn. You know, our subscribers definitely know about that. If not, you know, we're going to revamp and talk about that in the future, right? So that's really the strategy, ladies and gentlemen. Again, step number 1 is finding that EMA, the moving average, or the mean. Step number 2 is looking at the stacked EMAs, or the EMA stacked for a bullish, right? Meaning the stock is going higher, or they stacked negatively for a bearish trend, right? Number 3 is the ATR. What is the average true range that the stock moves within that, you know, that trading day, right? And step number 4 is really just the planning tool, right? Populating the planning tool with the information, and then choosing the right strategy, the call puts, and also expiration date. I highly advise whenever you choose expiration date, buy yourself some time, right? That's nothing like time. So buying time is really important. So even though some of the plays I gave you guys are a little bit risky, maybe like a week or 2 weeks out, it's because I feel confident that that stock is gonna do crazy things in a short amount of time. But when you're trading, right, when you do put debit spreads or whatnot, or you do puts, buying 3, 4, 5, 6 weeks out is really great. So that's really all I have. Oh, step number 5, I'm tripping. I'm losing it. All right, step number 5, right? I can't believe I forgot about this, right? We talked about the screener, right? How do we find these stocks, right? Right. It's extremely important how to find these stocks. So I'm going to show you a way to find them. And I'm going to show you this time, I'm going to show you criteria for finding stocks to buy puts, right? Because I showed you guys how to find stocks for buy calls. If you don't remember that, there was a video that I posted. Take a look at it, right? Because we're not going to go over it again for this iteration because we don't have the time. But so the criteria that I like to look at is very similar to buying calls, right? Does anybody know what short interest is? Short interest, anybody? Short interest. Okay, nobody wants to answer. Help me out. Okay, they're gonna leave me flapping. Nothing wrong with that. You know, it is what it is. Short interest, anybody? I need some help. Okay, it's all good. Forget y'all too.
Isn't that like the number of, I mean, just what it says, it's like the number of shares that are short.
Exactly.
been
That's
sold
exactly
short.
what it is. Exactly what it is. Yep. Man, if I would have put some money on the line, bet you everybody would have been answering.
Let's pretend you did.
You know what I'm saying? I got you, Shed. I'm gonna give you like 1,000 this week. So right now we in FinBiz, right? You guys know that. So screener, it's a way. This is a way to actually find some of these stocks, right? So whenever you're finding stocks that are they're more likely to be puts, right? You want to look at a few things, right? We want to look at the basic stuff that we like to look at, right? The beta, right? We like a beta over 5 is good, over 1 is better, right? So we're gonna go over 5, right? We want to look for stocks that are affordable, right? So we're gonna look like at stocks are under $50, right? And you see here that the criteria gets a little bit smaller, right? ATR, we definitely want an ATR over $1, right? Over 1, right? We want a stock that moves a little bit more. You know what? Let's just go over. Yeah, over 1 is good, right? Volume, right? Volume is important because it tells us the transactions that occur within that time period. Volume is usually transaction for that day. The more transactions, right? The more volume, the more people are trading the stock. That's the importance of the volume. So the average volume, we want over 500,000, right? At minimum, right? This is recorded. You guys are going to have this too. And you can look at it a little bit later. So you don't have to feel free to write all this stuff down. What else do we look at? We want to look at the moving average, right? 20-day simple moving average. So for this one, do we want to look for stocks that are below the moving average or above?
Below.
Well,
Yeah, exactly. Below the 20-day moving average, right? Easy, right? You see the criteria get smaller and smaller, right? Another thing that I like to look at, the short float, right? The short float or short interest, right? They're both synonymous to each other. It's what Shedrick said. It is the percentage of stocks that's being shorted. To short a stock means that you're selling it, right? You want the stock to go down, right? So we look at where's the short flow? Where are you? Oh, right here, short, float short, right? Look at that. The amount of short selling transactions of a given stock. Nice. So a stock is considered high, right? It has a high short interest if the float is over 20%. Again, a stock is considered to have a high short float or short interest if it's over 20%. So we're going to go to high, right? Over 20%, right? Look at that. We got boom, boom, boom. We got about 10 of them, right? Great criteria, right? So let's look at the chart. For the chart, we want to look at a stock that has consistently, looks consistently going down. Like, look at this, Bed Bath & Beyond. Looks like a good one. $13, right? Let me close this. Let's take a look at Bed Bath & Beyond. Ooh, Blink. Blink looks like a good one. Right. Oh, look at this one. The MTK. Yeah, that looks great. All right. Again, we want something that is trending down consistently. See that? That sucker's going down. This one is going up and down. We don't want that. We want something that has consistent, right? Well, Mara, Bitcoin is doing horrible. So of course this one is going to go down, right? So we got enough, right? We got Mara, DMTK, right? We got Bed Bath & Beyond, and we got Blink Charging Station, right? That's enough. That's good. Again, just to recap, we're looking at the beta, right? The beta tells us the flow, how the stock moves in comparison to the market. The market has a beta of 1, right? So that means that if the market moves $1, right? This same company is going to move $1. Make sense? The price, we want below 50. Moving average, like Cedric mentioned, below the 20 moving average, because now we know that the stock is bearish, right? We know a short float of high 20%. Average true range, we want it at least over 1. Average volume, we want some volume, right? We want to make sure that it has a lot of transactions on it, right? And that's pretty much it. So let's look at some of these stocks, right? Look at this bad boy here. Boom. Right. So we're gonna do some check on learning, right? So it's gonna be A, B, and C, right? Okay. So we know this stock is actually, well, before we get started, right? So we know that short floor is 25.6, 25.97%, right? That means that about 26% of the float, right? The float being 94 million shares are being shorted, right? We know that. So this stock in particular. So my question to you, right? Where would it be a great entry point for puts? Would you buy puts at A? Would you buy puts at A? Would you buy puts at B? Or would you buy puts at C?
Which is on the line.
Remember, ladies and gentlemen, the blue is the mean. The blue is the mean, right? The blue is the mean, right? Don't get distracted with the other lines, right? The blue is the mean, right? Right. And let me zoom this in so you guys can see it again, right? Please let me know if you can't see it. My question to you again, would you buy puts below the mean? Puts, right? Would you buy it at A? Would you buy it at B? Or would you buy it at C? Puts.
B.
Yeah, B. You
I
buy
got
it B
B.
because we want to wait for it to come back down, make a profit. So yeah, B.
Does everybody agree with B? Any rebuttals?
I would say not particularly at B, but right before it gets to C, when the 8-day moving average starts to cross the other moving averages. B could be just a small indicator, in my opinion. I want some confirmation until it actually crosses those other moving averages.
Okay. Anybody else have any other thoughts? Okay. The
And
correct,
you can go with
I'm sorry, go ahead, Joey.
you can go with A too, because I would choose A only because you got space between A and B that you got to fill the gap on.
What do you mean here?
Yeah, I see
Remember,
uptrend, but as you see the 8-day moving average did float back up, so you're taking a chance with that. But B is the most logical answer.
so what is your answer, A or B? Because you say A first and then you say B.
Yeah,
What's your
I
answer?
said A only because I was looking at more of a call going there because it's going up, but B is the most added because it's crossing back over the other 3 moving averages.
Okay, so we have majority B and 1A, Phillips A. Okay, Lamont, what you got, brother? A, B, or C?
I would say C.
C. You will buy puts at C.
Only because following the indicators, you see it's trading below the mean. So if I followed all the indicators and I also see that it's trading below the mean, I feel like C would be my point.
Okay. It's amazing that, we all have different answers. Well, not all of us, but. So, ladies and gentlemen, there's only one right answer. It is B. B is the right answer. A is wrong. C is wrong, right? Because whenever you're buying puts, that means you're placing a bet that the stock is going to go down in price. So you want to buy when the stock is at its highest peak, right? You already know that this stock is going to go down because it has a high short interest, right? Over 20% of it is being shorted. So you want to buy at the highest point, right? You want to buy above the 21-day moving average, or, right, you want to buy as close to the 21-day moving average, right? So the answer is B. A is wrong, C is wrong, right? A is wrong, C is wrong, right? So we're going to do another one, right? Another check on learning, right? So this one here. So would you buy puts? Well, I'm not going to do C again. At, let's see here. Would you buy puts at? My favorite color, pink. All right. So my question to you, right? Would you buy puts at A, B, and or C? Listen to the question. Would you buy puts at A, B, and or at C, right? You can choose more than one answer. Hint, 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 right? Ladies and gentlemen, where would you buy the puts?
I would
A
say
and C.
Does anyone have another different answer than A and C? Again, rule number one, we always buy at the mean, right? So A means that, look at this, boom. It was trading at the mean, right? If you buy puts, look what the stock did. It went down, right? But the stock right now, in the next few days, the next week, it's going to go down and test the support area. This is support, right? The answer is A and C. Any other answers is wrong. Any other thoughts is wrong, right? Okay. So again, that is step number 5. How do I find these stocks? The short interest is very, very important. The higher the short interest, right? It tells you that, hey, a whole bunch of people are betting that this thing is, or selling the stock, right? Very, very important. All right. You have the criteria. I'm recording this. You're going to have it for your preview, and then you can actually review it again, right? So that's the check on learning that we're doing today, right? So that's really all I have, right? So we're going to hold, I'm going to hold it 5 minutes for questions, 5 minutes, and no more than 5 minutes. So I'm just going to go around the horn. Does anyone have any questions, right? If no one has any questions, any questions?
I just want to confirm that what we just did was for short interest puts or puts overall, included in the options for today.
Yes.
That's how we switch with what we want to go in for puts. Okay.
Yes, exactly. So exactly, because I showed calls about 2 weeks ago in the first class. This is strictly for puts. Of course, look at this. Like if you, B would have been a good answer for calls. That would have been an answer for calls because look, because we wanted to rally to the mean, right? Boom, right here, right? The high probability bet is buying at the mean or above the mean puts, right? That's the high probability trade, right? We wait for the rally, boom. Oh, is that the mean? Let's buy these puts, boom. Any other questions? We got 4 minutes.
I have one for just for clarity. So like with this particular chart, bro, like if we're looking at Bed Bath and Beyond the night before and we're thinking of day trading, I'm just trying to make sure I'm timing like entry time or how long I'm watching this. So if I'm looking at A and I recognize I know I'm going to buy puts based on all the other strategies, right? This is just pretty much the day trade for the next day, or like how are you? Is there an exact way to time it? Like I wouldn't look at this chart and then wait 3 or 4 days to get in, right? Because we're day trading. Does that make sense?
If you're day trading, you just got to go to a shortened time frame. Like if I was day trading this, I will go to like 50, let's say the 15-minute chart, right? This is what I do. Good question, actually. If I was day trading, this is what I do. If I'm buying puts, I'm buying puts right here. Right? Each one of these candles represent 15 minutes, 15 minutes, 15, 15, that's 45 minutes. I buy my puts around here, right? I sell around here, right?
Okay.
Look at this. I buy my puts around as soon as it touches here, right? I sell around here, somewhere down here. Make sense?
It makes sense.
Or you
Day
can,
trading, you're looking at shorter time, but you would be looking at the daily charts if you were thinking about buying puts over a week or more.
no, if you swing trading means you buy today and you sell the next day or whenever, right?
Okay.
Yeah. Good question, actually, Seth. Real good question. Yeah, the shorter time frame, ladies and gentlemen, is for day trading. I prefer. I'm not gonna teach day trading anymore because it's very, unless it's like when we do the tier 3, I would teach that. It's gonna be definitely like it's gonna be more expensive when I'm teaching it because it's very, very difficult to day trade. You know, I mean, I may make it look easy because I understand all the parameters, but it's not. It's hard. It's hard. It's very challenging to day trade. Just gonna put it out there. So just not to cut into you guys' time. We got 2 more minutes. I'm gonna give three more minutes. Any questions? This is your time to ask and learn. You don't want to learn now.
Is there a particular put that we're looking at for today that I missed at the beginning of the briefing here?
No, today is really just re-emphasize the strategy for puts. That's what it's about. And also just to do a recap of, how well we did. So on Fridays, we like to use this time to like talk about, hey, these are the trades we did. And then learn, re-emphasize what we already did and check on learning. Yeah. But
I got you, because I remember you saying we usually don't want to try to do anything on a Friday.
yeah, because ideally I would like the day trade in this environment, right? Because what we've seen is that, so I did a class yesterday, right? I talked about the VIX, right? When the VIX is high, the market is down, right? So whenever I trade, I always pay attention to the VIX. I pay attention to the VIX. The VIX tells me, the VIX right now is at 28. Oh, let's look at the market. Everything should be probably red and bloody right now, right? Oh, Apple's like going insane, right? Apple's like going crazy. Like Mar is up. But for the most part, the stock market, I like to look at the futures. I don't like to look at this individual stuff. These are the futures. They're kind of stale right now, right? NASDAQ is up a little bit, S&P's up. NASDAQ is up because Apple is like killing it, right? Any other questions? We got, I'm gonna give you guys 1 more minute. So
just a quick clarification. Do you remember what day the call class was? Was that the 2-hour course that gave the parameters for screening for calls?
Yes, that was last Monday. It was on the 17th. I should have posted on the 18th of January. I'll make sure I tag you on it, Keith. I put it in my notes. Tag Keith.
And me as well, Leonard Graham tag me.
Yeah, right. Anything else, gentlemen? Ladies? So if there's no questions, I'm gonna stop recording, right? And I'll stay here and probably